It's important to ensure that we strike the right balance. There are some countries that are below the 15%, quite a few of them are above the 15%.
The Department of Justice has found and recaptured the majority of the ransom Colonial paid to the dark side network in the wake of last month's ransomware attack.
Well, it removes gradually the underlying cause, the pathophysiology of the disease, and our aim is to make the product available everywhere.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance, the Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The U.S. recovers the vast majority of the Bitcoin ransom paid to the perpetrators of the cyber attack on Colonial Pipeline last month. Cryptocurrencies slide. Biogen soars after the FDA actually approves its Alzheimer's drug, while the victory has the potential to send waves through the industry, spurring rivals at work on similar therapies. Plus, Angola's Finance Minister, Vera Davis de Souza, joins us shortly for a conversation on vaccines and commodities. We'll also be joined by Salvatore Ferragamo's Michele Norsa to discuss the luxury recovery. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. India's daily COVID case count has dropped below 100,000 for the first time in 2 months. But there are concerns the Delta variant, first identified in the country, is leading to symptoms including hearing impairment and severe gastric upset not typically seen in COVID patients. Data from England suggests the variant has a higher risk of hospitalization. It has now spread to more than 60 countries over the past 6 months. Japan's economy shrunk less than first reported last quarter. GDP contracted an annualized 3.9% from the final quarter of 2020 throughout the end of March. That's a much better result than the minus 5.1% originally expected. Separate figures showed wages rose in April in Japan at the fastest pace since 2018. And a US report is said to have concluded the coronavirus could have leaked from a lab in Wuhan, in China. Dow Jones reports that the study was prepared last year by the Lawrence Livermore National Laboratory in California. It said the theory of the Wuhan leak should indeed be investigated. U.S. intelligence agencies have been investigating that too. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Europe's vaccination program has surpassed 270 million doses administered, and today the EU Parliament is expected to give final approval to digital COVID certificates, allowing free travel across the continent. Now, Germany is currently vaccinating about 1% of its population every day, but the EU's largest nation has now given out more doses than the entire continent of Africa. So how does the world remedy the discrepancies in the vaccine rollout? Well, according to some, the key to vaccinating the developing world may be intellectual property waivers, something to which the EU has expressed opposition. Now, over the weekend, however, U.S. Trade Representative Catherine Tai also said that progress was being made towards a deal. The latest draft from proponents of the waiver would set a time span of at least 3 years, allowing for a boost to production in countries still battling the virus. Well, joining us now to discuss all of this is Vera Davis de Souza, the Angolan Finance Minister. She recently voiced her support for a waiver at the Paris Summit in May. So, Minister, thank you so much for joining us today on Bloomberg. Minister, I wanted to start with what we're expecting from the IMF, which they're scheduled to announce their latest findings from the review in Angola, I believe, this Wednesday. Do you think Angola has made enough progress, or are there still reforms to be done to satisfy IMF conditions?
Thank you, Francine. Thank you for the opportunity. Yes, we think we are working hard to address the goals and the measures that we define to ourselves, and that the IMF is supporting us technically and financially to implement. So we're still committed with the program. We're still committed with the reforms. So we are highly optimistic around the result of this evaluation.
Minister, will Angola need a second IMF program once the current program ends at the end of the year?
We are now discussing and evaluating the various post-program options that we have. We are looking at the pros and cons of each option and discussing it with the mission, with the team of IMF, and internally in the government. So after this analysis and before the last evaluation, we will take our decision.
Minister, how concerned are you about, of course, the impact that the pandemic has on inflation and your currency? A reminder to all of our viewers, Angola is actually the second biggest oil producer in Africa.
As you know, the pandemic had a huge impact in our economy, direct impact and also indirect. Direct through the increase on the expenditures regarding health, and indirect because of the performance of the oil price and the drop on our growth, and all this with the reforms that is necessary regarding the free float regime on the exchange rate. Hit us very hard because we're still importing a lot of the goods that we are eating. So the impact of movements on the exchange rate have direct impact on the inflation. So the central bank is taking measures regarding the monetary policy, but most important than that is to putting in place the necessary measures for us to grow and to generate revenues and hard currency to benefit our international reserves and our exchange rate and our inflation.
So, Minister, what first of all is your growth forecast for 2021, and what do rising oil prices mean for your forecast? And secondly, how much foreign direct investment are you attracting to try and diversify the Angolan economy?
Well, we're still being highly dependent on the oil sector, it's true. So we still working with the oil sector industry to motivate them to make investments, to make sure that our production stabilize, stop dropping, and hopefully start increasing. We keep working on that front, but we are also creating the conditions to develop the non-oil sector at the agribusiness, small industries, fisheries, and financial service, capital markets. So we are putting in place the infrastructures and the proper environment to attract those investments.
Minister, is Angola planning to issue a Eurobond this year?
At the beginning of each year, we publish on our DMO website annual debt plan. So we already published it regarding 2021, and no, we are not intending to issue an Eurobond this year. We will see. We will foresee the financial conditions to think about next year.
Thank you so much for your time today. Vera Davis de Souza, they're the Angolan finance minister, joining us for an exclusive conversation. Now, we're also just getting some breaking news from the London Metal Exchange, because moments ago, we understood the decision from the LME to reopen the trading ring. And this is really a change of plan. Remember, it was the first time in decades that it was closed in March 2020. And then the London Metal Exchange had actually launched a review to decide whether, because of this closure, they were going fully electronic. In January, of course, a reminder, it's the world's oldest and biggest marketplace for industrial metals. They launched this consultation, and today the results came out saying they will actually reopen the trading ring, opposed to what we thought they would do actually just months ago. Now, Smart Conversations continue right here on Bloomberg Surveillance Early Edition. Later on in the program, we speak to Mr. Moneymaker, venture capitalist Eric Collins, about his new TV program. Before then, we'll speak to Michele Norsa of Salvatore Ferragamo about the luxury space and luxury travel. Up next, though, it's the PIMCO strategist, Jean Frieda. If you have any questions for our guests, just IB plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, European stock markets mixed this morning as investors await more clues on whether the pandemic recovery will stoke price pressure in developed markets. Traders counting down to the latest U.S. inflation reading on Thursday, one of the last major data points before the Fed's meeting next week. Now, also on the docket is the ECB meeting in the same day, when we may get clues on inflation and, of course, stimulus in Europe. Well, joining us now to talk about the markets and everything in between is Gene Frieda. He's PIMCO global strategist. Gene, it's been too long. I'm so delighted to speak to you on a day like most days where we worry about inflation, and there are the people that think that inflation is transitory and those that say actually because of the stimulus packages it's absolutely not transitory. Is this the one bet you need to get right for 2021?
Yeah, I mean, I think what you have to recognize about 2021 is it is a tale of two narratives, neither of which will be disprovable for at least a couple of quarters, if not a bit longer. And so it's really navigating through both of those and understanding how much protection you get in one narrative, call it the transitory narrative, from the messages and the policy stance coming from the major central banks. I think you probably do get more protection from those narratives, at least over the next quarter or so, because it's just too early to tell whether or not inflation is going to be transitory, and major central banks aren't going to change their tune until they're confident that the recovery is well entrenched and underway and broadening, and you're actually seeing the impact on labor markets as support packages are withdrawn. So two narratives, you have to navigate in between the two of them, but we think right now it's probably the head fake narrative, transitory inflation, that's the dominant one.
So, Gene, how much recalibration? So when will be fixed? When will we be fixed on what kind of inflation we'll have? And if it takes 2 to 3 months, how do you position yourself, in that time period?
Look, I mean, I think under the scenario of transitory or the scenario of persistent, bond yields are very low, and so from that perspective, I think no one is going to make a big bet on the idea that recession risk is right around the corner. It is interesting that what is happening with this inflation is that to the extent that the hump is higher and the persistence is a bit longer, there is a discussion about the impact that it has on the recovery. Real incomes suffer from higher inflation in the short run, even if inflation is transitory. And so I think from that perspective, the way that we steered through it is, at some level, where are the asymmetries? Bond yields, it seems very unlikely that they're going to go down by much relative to what they can do if either inflation is more persistent or the recovery is just really strong. And that's a related discussion we're having, which is where are we in the cycle? Are we early cycle? Are we mid-cycle? Are we late cycle? You can see elements of both in different sectors. Yeah. And frankly, given the supply constraints, given the bottlenecks, it's just a little bit too early to tell.
So again, what does it mean for where what do you buy right now, actually, given the uncertainties that you so eloquently put together?
Yeah, I mean, I think where we are right now is, number one, I think we are inclined toward, rather than having a strong, overweight or underweight in core duration and fixed income, we're probably more inclined toward curve steepeners on the basis that central banks will remain very dovish, at least for the next couple of years. And so, bond yields will kind of drift higher in the back end as the recovery continues and matures. We also think, we will continue to see dollar weakness over the cycle. And where you are particularly now is one in which the laggards, particularly the emerging market currencies, can start to see some material catch up. Part of that is because the central banks there are not certain whether or not, their inflation expectations are less well anchored. And so they're actually hiking rates, while the developed economy central banks are keeping them very, very low and very accommodative. And so we think that gives potential to catch up after a long period of underperformance, particularly for the economies that are, getting through the last COVID hump later and vaccinations later. We think it's their turn now.
Gene, I was looking at some of your notes, and you say that China's continuing to lose steam. What do you do with, in general, emerging market assets, but China in particular?
Yeah, I mean, I think everyone focuses on the Chinese credit impulse, the change in the pace of credit flow to the economy. And, that credit impulse, which tends to lead growth by a couple of quarters, has slowed quite materially. It has been a concern to a lot of people. I think the way that we see it is, unusually, credit impulse comes as a function of GDP growth. GDP fell last year. It's rebounded this year. So, there's kind of a denominator effect on the credit impulse that distorts, the turn lower. We think China's slowing gradually. We don't think it's slowing dramatically, and we think that gradual slowing coupled with the strong acceleration in developed economy demand basically creates a very supportive environment for any cyclical asset, and particularly for commodity prices.
But could we actually see some massive stimulus coming from China as this U.S.-China kind of, war trade continues?
I don't think so. I mean, I think, we are transitioning to a much more conservative China, conservative policy reaction function. Part of that is because of the pressure coming from the U.S. There's a recognition that this pressure won't go away anytime soon. The U.S. is trying to kind of build a coalition of democracies to confront China. And that makes China much more cautious about protecting any vulnerability or perceived vulnerability, one of which is the high debt levels. And so China's become much more averse to stimulating at any cost. And we think they're using the stimulus in the West to basically try to delever is too strong of a word, but at least to get leverage, the growth in debt under control.
Jean, thank you so much. Jean Frieda, their PIMCO global strategist, joining us this morning. Now, the U.S. recovers most of the Colonial Pipeline ransom money. The Department of Justice warns hackers that the U.S. will use all available tools to make those attacks more costly. We discuss that next. This is Bloomberg.
Earlier today, the Department of Justice has found and recaptured the majority of the ransom Colonial paid to the dark side network in the wake of last month's ransomware attack.
So the U.S. recovers almost all of the Bitcoin ransom paid to the Colonial Pipeline hackers. Now, Colonial paid the Russia-linked ransomware group $4.4 million, or 75 Bitcoin, after the cyber attack caused fuel shortages across the East Coast last month. Now, joining us for more is our cybersecurity reporter, Jamie Terabek. Jamie, great to have you on a day like today. So what do we actually know about the U.S. government's clawback of the ransom?
Well, what was very, very sort of significant with this announcement that the DOJ, the Department of Justice, and FBI carried out overnight is that they said that they brought in that Colonial Pipeline when it was hacked on or about the same time that they learned that they were the victims of a ransomware attack. They brought in the authorities, and because of that, supposedly, this allowed the FBI and sort of federal agencies to gain a greater sense of awareness and understanding of the hackers known as dark side that they had already been investigating for several months now. And so when the payment was made, it went into a wallet, and the payments can be seen. There's nothing sort of anonymous on the blockchain other than sort of access to those wallets. And somehow, they don't say how, but the FBI did gain access to a private key, which is almost like a password to someone's email account, and that's how they were able to seize the 63.7 Bitcoin. It's worth a little less now than it was when Colonial paid it out. It's now worth about $2.3 million, but given Bitcoin fortunes, they may see an uptick in that value, in a couple of weeks from now.
So, Jamie, it doesn't let companies off the hook, right?
No, not at all. I think that one of the biggest things that we saw, even as they were very sort of happy that the money was recovered, Colonial did come back and say that they needed to do more to beef up its cyber defenses. The Biden administration is spending a lot of money to build in cyber protections, and there's going to be more sort of demands for accountability and transparency from the private sector as well. And that's not just, obviously in the States, this is a global thing. We've seen, JBS, the global meat supplier, was attacked not too long ago. They're operational again because they said they had a much more robust recovery system in place. But we've also seen what happens when hackers get hold of, a government healthcare system, as they've done in Ireland. This is a problem that affects everyone. Ransomware attackers are becoming more and more aggressive and ambitious in their scope. And it's certainly, just because this happened doesn't mean it's okay and the money will somehow find its way back to you.
Jamie, thank you so much. Jamie Tarabothe, our cybersecurity reporter. More on this shortly. This is Bloomberg. Now, the U.S. recovers the vast majority of the Bitcoin ransom paid to the perpetrators of the cyber attack on Colonial Pipeline last month. Cryptocurrencies slide. Biogen's soars after the FDA approves the Alzheimer drugs, while the victory has the potential to send waves through the industry, spurring rivals at work on similar therapies. Plus, venture capitalist Eric Collins joins us to talk about his new TV program, Moneymaker. But up next, we'll discuss a luxury recovery with Salvatore Ferragamo's Michele Norsa. So good morning, everyone. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 8th of June. So as the EU debates virtual vaccine passports, the bloc's reopening is firmly underway. Encouraged by extra cash in the company's pockets, Europe's luxury industry hopes to demand that evaporated at the outset of COVID will return through the summer. Well, joining us now is Michele Norsa. He's Salvatore Ferragamo, Executive Vice Chairman. Of course, Ferragamo is a major Italian luxury brand. So thank you so much, Michele, for joining us to make us smarter on the luxury sector. And what you are a great student of is, of course, understanding how we travel and shop and how that will change in post-pandemic. Given the last 12 months, what we've lived through, how do you think will be the major change for the luxury world in the future?
But you see, I think there is a major rebalancing in terms of consumers and in terms of geographies. In terms of geographies, of course, global luxury companies have been facilitated because Asia, China, still driving a market, were able to compensate in some way the failure of United States and Europe. But now getting into 2021, while we see United States restarting with a very stronger than expected recovery, and showing numbers which are even better than 2019, we have Europe still in deep difficulties, and we still see the capitals in Europe as phantom cities. I was very impressed. I was in Paris the last weekend, and really it looked quite sad in a certain way. On another side, the rebalancing we will be facing now, it's between different consumers. I'm a fisherman, so I think I look at the luxury industry as fishing in three different ponds. So you have a pond of the local customers, which were not so important at a certain time, but now they are picking up from China to Europe to United States. You have, of course, the affluent tourists, which were representing the real driver of growth. And then you have online. Now, I see in the future a rebalancing of these three categories. And I don't say they will go to one third, but who knows? In 5 or 10 years, that could be the new balance.
But as economies pick up, what did you see in China? Are people flocking back to luxury companies? Or are they flocking back to buy stuff because there's been so much pent-up demand for the last 12 months? Or does the way we change, and because we've been working from home, so the way we shop change almost forever?
But China has a capacity of reaction which is truly unbelievable. I always look at the flights. China is the only country where domestic flights have gone already to the level of 2019. even now probably in the last months with double-digit growth. So the domestic consumption is driven by the economy, is driven by the demography, because still people are growing in number, and I think also by the capacity of income. So people are getting richer, they have more money available for spending for themselves. They are not traveling anymore, so they, in some way, they can even spend more locally. Inside China, you see major differences. While the north was always the area where people were spending more, like it happens in most countries, for wear and luxury. Now the south, with the technology, Shenzhen is becoming the capital of China, as Miami for United States. So you see there are areas which are picking up faster, but the big difference is made by investment. Chinese, they never stopped investing. There are probably more than 200 new malls under construction, and the opportunity to get further to new territories and to reach new age groups becomes even bigger. If we look in the next 5 years and we imagine China economy and China consumption of luxury goods to grow in a similar way, definitely for most companies, they will represent 50-60% of the turnover.
Which is quite incredible, actually, some pretty extraordinary figures there. Michele, what are you seeing in Europe? So I know everything depends on vaccine passports and when people will be able to travel again, but specifically, what does it mean for duty-free stores?
But, you know, this is a major concern. Let's say, while domestic traveling has recovered, fully recovered in China, up to probably 80-90% in the United States, international is still at 1/3 of its full potential. Let's say, is very, very far from 2019 numbers. Still, European airport, I was checking in Paris, is in the area of 30% in terms of number of flights. So all of the duty-free, let's say the travel retail industry is suffering, but also the European capitals are under pressure, both in terms of real estate. I'm talking about real estate value for offices and commercial, if you want, while probably residential remains strong. And the point is, both Asians and Americans don't see Europe as a safe haven. So I think people, for traveling now, they want to have safety, they want to have security, even from violence, and that they want to know exactly about the vaccine, and also they want to have a clear policy in terms of visa and quarantine. So Europe is penalized. There are different rules between the UK and continental Europe. Rules are changing every 2 or 3 weeks. And I think a recovery for Europe will come later in 2022, going back to normal probably only in 2023.
How much of a difference will the EU recovery plan actually make? So I don't know whether it's infrastructure that will help drive tourists, or whether it's just, as you've explained, it's just that rules are a little bit all over the place, so that will deter travelers. Like, as you know, as a chairman of a big company, what do you need from European leaders today?
I think this is extremely important. In fact, when you look at true luxury travelers, they are looking for a few number of things. They have clear driver. One is shopping, one is food and beverage, one is art and culture. And I think Italy is definitely leading in all of these areas. Where probably Italy is weak is in infrastructure and services. And I must say that not all European countries are really able to offer to the tourists what they are looking for. What is quite interesting, it was in a BCG document recently, is that the Chinese are driven more by food and beverage than shopping, Americans by shopping, and Europeans by wellness. So Europeans will probably travel more in Europe looking for wellness and quality in art and culture, but to attract American and Asians, not only Chinese, it will be fundamental to give them the services they are expecting, and also to promote and create easier condition. And I think that the flying industry, the airline industry, will play a fundamental role. At this time, ticket prices are going up very substantially, from the low cost to the normal IATA airlines. They are in an area of 50 plus increase.
As always, thank you so much for joining us, Michele Norsa, there with a lot of insight, of course, on his industry, the Salvatore Ferragamo Executive Vice Chairman. Now, coming up, we also speak to Eric Collins, the Chief Executive of Impact X Capital Partners, a venture capital company supporting underrepresented groups across Europe. Now, we discuss his new business reality series, also The Moneymaker. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Global policymakers are crafting their international tax plan to make sure Amazon is included, even though the tech giant's profit margin is below the 10% proposed threshold that would give other countries rights to collect revenue. Amazon has an estimated 7.1% global operating margin this year. Bloomberg understands one scenario involves targeting individual operators like Amazon's more profitable cloud computing unit rather than the entire company. Bloomberg has learned that SoftBank is seeking a loan of some $7.5 billion tied to its planned sale of chipmaker Arm to NVIDIA. The proceeds would provide investment funds for SoftBank's Vision Fund with collateral provided by the Arm disposal. Mitsuo Bank is coordinating that deal. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, my next guest is the Chief Executive of Impact X Capital Partners, a venture capital company supporting underrepresented entrepreneurs across Europe. He's now hosting a new business reality series called The Moneymaker. Now, the series follows him in his quest to offer not only his expertise, but also investment into 4 small, struggling British businesses. Eric Collins, welcome to Bloomberg Surveillance, the early edition. Eric, I think we spoke about 12 months ago, and I think, what I was dying to ask you is, are things getting a little bit better? You're, fighting the good cause and trying to get money in groups and entrepreneurs that in the past just didn't get access to more, I guess, some of the more mainstream entrepreneurs that we see out there. Are things changing as they should?
Impact X actually did a study that had us focusing on what's going on over 2020 and a little bit before that, the 10 years preceding that, in terms of putting money into the hands of underrepresented entrepreneurs. This was done by Extend Ventures, a research organization in the UK. What we found is if you're looking specifically at the UK, that the amount of money that had actually been invested was only 2.9% for women. That's all women, including white women. That 0.2% of venture capital pounds and pence went to Black founding teams, and less than 0.02% went to Black women. That indicates, if we look at the last 10 years, that number has remained flat. So maybe the good news is that, indeed the pandemic hasn't decimated those businesses in terms of getting financial support, but it certainly hasn't advantaged them in any way in getting additional financial support. And if you look at some reports that are coming out of the US, we'd find that the amount of money invested in women in particular has gone down precipitously between 2019 and 2020, at least from a venture capital perspective. And that's the sector that we've been expecting to come up with these fantastic companies, the next Amazon, the next Netflix. We'd expect expect that kind of funding to be able to drive those sorts of returns a decade or so from now. And without that sort of investing in these sorts of communities, it's unlikely that we're going to get the kinds of results we're looking for, which is breakout companies coming from underrepresented entrepreneurs that we would then be talking about on this program, 5 or 10 years from now.
But Eric, first of all, why is the pace of change in this so glacial still?
Even though you had a man named George Floyd who's murdered on television, and you then see from that all sorts of conversations and statements about we want to do things differently, we're actually going to make a change. Change is coming pretty slow in terms of actually fulfilling the responsibilities and fulfilling the promises that have been made under sort of that time of heightened attention to systemic racism, systemic misogyny, and sexism. Now when the rubber hits the road and we're saying, well, let's actually measure what has happened, how much money has been put to work, how much money has been put into Black banks, how much money has been put into women entrepreneurs, we're finding that process that has been talked about is still being talked about and is not actually being implemented. And of course, the solution is that capital, which exists out there, capital which is existing from banks, venture capital companies, private equity companies, should be invested in underrepresented entrepreneurs of all sorts, because that is where there's a great inefficiency in terms of capital investment and a great opportunity for upside based on looking at inefficiencies in the marketplace.
But Eric, I speak to a lot of chief executives that are telling me that things are changing, that actually, even some of their lending facilities are changing. So if it's not changing, what needs to be the catalyst for actually capital to flowing to some of these amazing entrepreneurs that for so many years have been underrepresented that could actually be the next Amazon?
I think you're going to have to look at organizations like ImpactX, Francine, as the solution. Even if an organization says today, what I want to do is transform how I'm investing, how would they actually begin? If the numbers are telling us that hasn't been happening over the last decade, where suddenly are they getting the network to come up with the organizations in whom they would actually be investing? Suddenly, these organizations who have never had a woman partner, never had a Black partner, never had an Asian partner, are suddenly going to find themselves in the middle of some of the most exciting deal flow. How would they do that? So from my perspective, I understand people make these statements. I understand that they measure this by sort of the commitments that they're making. Then the question is that commitment actually getting into the hands of the entrepreneur? And the numbers that I'm telling you indicate it's not. And I would say that it's a network effect, because people are investing in their networks. They're investing with people that they know. They're getting recommendations from people who are already there. We know that there's underrepresentation at the board level. We know that there's underrepresentation in the C-suite. We know there's underrepresentation in the general partner categories for the various private equity firms and those who are extending risk capital, as well as the banks. So I can't imagine that people would say that they suddenly have, after 1 year, a fantastic sort of an epiphany, and they are suddenly able to get into the networks for the deal flow, which would actually create then the opportunities. And that's what I think is the missing piece. I think, it deals with hiring, it deals with network, and I particularly always focus on the network effect. If your network doesn't have these people in these companies, how are you actually going to get there?
Eric, congratulations also on your business reality show. Does it actually make a difference of, people seeing businesses wanting to be part of it or giving you more money because of it?
Well, that's 3 good questions, Francine. Thank you. The reality show program itself is kind of an extension of ImpactX. It is looking for undiscovered gems that exist around the UK. It's based on the American television show that's on CNBC called The Prophet. We're on Channel 4 and can be watched on all 4 for those people who haven't seen us. And it's called The Moneymaker. And The Moneymaker is seeking to go to places and to the kinds of institutions that don't normally, the kind of industries that don't normally get the kind of investing that I do. These are organizations. One was in the invisible repair space. Another one was a bakery. Another one is prepared frozen meals. Those don't normally get the attention of venture capitalists who are seeking to find the next Airbnb. So to go into those organizations, to go into those communities and say, look, your business is struggling because of COVID. All businesses are struggling of your size because of COVID. We have an idea. And I think that I can bring my resources as well as, which is not just my capital, but also my network, to help come up with a new transformational plan that'll make you a bit future resistant and possibly even help you to grow at an exponential rate. And that's what we bring to these organizations. And hopefully there are individuals who are watching who would say either we're similarly situated and I'm learning some lessons, or, this is something that I could do, and maybe I will get on the entrepreneur business owner train. It's been quite rewarding for me to actually be able to participate with the companies that I have. Fantastic entrepreneurs.
Eric, thank you so much for joining us. Hope is a regular. And actually, you should have also a show on Bloomberg. Eric Collins there, Impact X Capital Partners Chief Executive Officer. Now, coming up, the FDA gives Biogen's Alzheimer's therapy accelerated approval, a possible game changer for treatment. Some scientists are skeptical. Up next, we speak to Sam Fazeli from Bloomberg Intelligence on all of this. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, pharma giant Biogen took a colossal risk in late 2019. It revived an Alzheimer's disease drug it had left for dead earlier that year after it appeared to fail 2 large clinical trials. Yesterday, that risk paid off. The FDA granted a historic but controversial accelerated approval for the therapy. Well, for more, we're joined by Sam Fazeli, Bloomberg Intelligence Senior Pharmaceutical Analyst. Sam, thank you so much for coming on the story. Now, when you read some opinion pieces, they say that actually this was the worst decision, and also questions why it was now given approval. Others hail it as a game changer for the industry that will lead to more therapies being discovered. Is the truth somewhere in between?
Yeah, Francine, this is the day that we should all be doing a victory lap around the office or wherever we are, because it's been such a long time since a new drug has been approved for Alzheimer's disease. Unfortunately, what you just described is actually a reflection of what's going on in the scientific community as to the view that people have to the importance of the parts of the disease that this new drug addresses, i.e. those amyloid plaques in the brain. So the scientific world has been divided between those who are believers and those who are not. And whatever the case is there, we do now have an FDA-approved drug where there's also controversy over the actual benefit that it might provide, and we'll have to wait and see how payers, society, doctors, etc. approach this.
So, is the controversy real, first of all, Sam? And what is actually the controversy about?
Yeah, the controversy is absolutely real. The data, as you rightly said, it first failed to achieve the endpoint that the trial was designed to achieve. And then they looked deeper into the data and they found some evidence of potential activity. The problem is that is not how clinical trials are designed. What the FDA or looked at or used, what the FDA seems to have done here is to say, look, we've got a potential drug.
Sam, thanks so much. Sam Fazeli there. Of course, we'll have plenty more from Sam throughout the day. This is Bloomberg.
I think the Fed, as well as the markets, don't really mind rising rates as long as they're rising for the right reason, which would be inflation.
I do think this is a bit confusing for the market at the moment, and it would be quite good if we had one consistent message from the US.
The bottom line, though, is we're getting a big spike in inflation here, and we're looking for another big number this week with a 0.5 rise in the US core CPI.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
Well, good morning from London, Berlin, and New York on this Tuesday, June the 8th. The gang is back. Our top stories today. Game changer Biogen's big bet on an Alzheimer drug pays off. It's likely to lead other drug makers to come out with their own therapies for the disease. The hackers get hacked. The U.S. uncovers digital addresses and recovers almost all of the Bitcoin ransom that Colonial Pipeline paid after last month's cyber attack. And better video, stepped up audio, and lots of privacy controls. Apple previews the next generation operating system that will run on everything from iPhones to smartwatches. Well, good morning, everyone. There's quite a lot going on. We begin with some headlines from the White House. President Biden setting up a task force also for short-term supply chain issues. And this, Kailey, is something that we've been looking in and out because of the chip, of course, shortage that has really affected all industries across the board. I don't know whether it's playing out in the markets today.
Well, it does in a sense, Francine, because that is something that feeds into kind of inflationary fears, these supply chain issues, and the markets continue to grapple with what inflation is going to do. Of course, we're awaiting that CPI data on Thursday. And where that leaves us is a market that's really looking for direction. The direction in the Asian session was mostly lower. The Kospi, the Nikkei, the Hang Seng, all down. It was Chinese equities that actually underperformed, with the CSI 300 down about 0.9%. Speaking of Chinese assets, I do want to note what was happening with the 10-year government bond yield. It's sitting right around 3.14%. You did have some comments from the finance minister in China yesterday that may be easing some supply concerns in this market, but that is something to watch. And in foreign exchange, I would note the Japanese yen weaker against the U.S. dollar. It is a broadly stronger dollar story in the G10 space today. Speaking of U.S. assets, a quick check on what futures are doing. We are struggling for direction at the moment, though slightly positive, up about half a point on S&P E-minis. In the Treasury market, we're around the lowest since late April on the U.S. 10-year yield. It's sitting about 1.56%. I would note crude as well. WTI seems to have topped out around that 70 level. It is now lower for a second day, sitting at around $68.69 a barrel. And then, of course, I would note Bitcoin and other cryptocurrencies are under some pressure today, Matt. Right now, the Bloomberg Galaxy Crypto Index is down by about 8%.
Yeah, watching Bitcoin very closely. So much news on, Kailey, you know, the feds possibly hacking servers that hackers use to store private keys and then getting Bitcoin back. So very interesting stuff that we're going to dig through. Right now, I want to bring you some breaking economic news. In the euro area, we had first quarter GDP revised up to a loss of only 0.3% in the first quarter. Previous estimate had been for a loss of 0.6%. If you look at the year-over-year number, it's a drop of, or a contraction of 1.3%. That's better than the contraction of 1.8% that had been in the earlier estimate. We're also getting German investor expectations as measured by the ZEW index right now. June ZEW investor expectations falling to 79.8 from an estimate. Well, the estimate had been 86, but falling down to 79.8. So missing the estimate and missing the previous reading as well. Right now, we don't see a lot of follow through in terms of the markets, but let that sit for a minute. It has just come out across the tape. Take a look at what's going on in Europe. You can see here that there's a lot of gray on the screen. That means there's not a lot of movement in one direction or the other. You do see France and the UK gaining, Portugal and Austria right now, as well as Switzerland falling. But otherwise, you don't see a lot of direction. The Stoxx Europe 600 is gaining about 0.2%. So the broader benchmark is up right now. You have a 10-year German Bunds trading at minus 20 basis points, and they've been there all morning. So watching to see any movement there. Interesting to watch the euro pound. It looks like the euro may be gaining some ground. Well, it certainly is gaining ground right now, but maybe gaining a little bit of runway for a takeoff against the pound at 86 pence. And then Intermediate Capital Group is a private equity fund that trades in the UK. It had big beats in its earnings report. Citi among the analysts that really like what it sees. And as a result, you see a gain there of 5.5% for ICP, or Intermediate Capital Group, Francine. So there's a lot going on today, especially around individual stock stories and industry groups. Waiting really for the big macro data to come out in terms of inflation from the U.S. on Thursday, in terms of the ECB here in Frankfurt on Thursday.
Yeah, I love how you say ZEW. It makes me always think of Pulp Fiction. between the Z and the Z's. Now, a look at what else is going on today. We'll get, of course, some data out of the U.S. with the trade balance for April, 8:30 a.m. and job openings at 10 a.m. New York time. Then shortly after, it's the Bloomberg Deal Summit. Hear from chief executives, investors, insiders about the driving forces behind the boom in M&A. That's from 9 a.m. New York time. And then a little bit later after that, also follow along the chief executive of Colonial Pipeline as he testifies before a U.S. Senate committee. Will be on the lookout for any more details about the recovery of that ransom, one of our favorite stories today. And then the World Trade Organization kicks off a two-day meeting today under discussion, expanding the production of COVID vaccine facilities. Now, onto pharmaceutical stocks, and shares in company Biogen surged yesterday after its controversial Alzheimer's drug was granted a historic approval by U.S. regulators. The company's chief executive, Michele, spoke to Bloomberg after the news.
Down the road, there might be additional hypotheses, but this will take many years before we can see the scientific proof. And as I was just saying, today you have 3 compounds with similar activity, and we are the first one in the market. In a few years, there will be others, and we invite them because the market is so large.
Well, joining us now is Bloomberg opinion columnist Max Neeson, who's argued that the FDA approval is a big mistake. So thank you so much, Max, for joining us. So it is confusing, actually, because a lot of the press is saying this is amazing. It will actually spur more companies to do these type of therapies. And you actually argue that this was a huge mistake, and it could also, lead, I guess, to more investigations.
Yeah, I feel very strongly that this wasn't a very good decision at all. So Biogen, the evidence for approval is based on 2 studies, mainly that it ran testing the medicine. One of them failed very badly. One of them was a pretty marginal success. But because of the sort of enormous unmet need, there's no therapy that does anything but treat the symptoms before this. The FDA was convinced to give it a shot anyway, but now the U.S. is set to spend what may be billions of dollars on a medicine for which there's really not good evidence that it does anything at all, and the effect for patients, even in that good trial, was quite modest.
Why do you think the FDA approved this, considering the fact that the trials didn't go well, in fact, were halted when Biogen realized they weren't going to go well, and now they have to continue trials that, of course, they're going to drag their feet on and take as long as they can to get those results while they pull in the cash from this $56,000 a year treatment that, in your column, you point out could cause brain damage.
Yeah, so I really think they were just convinced by the fact that there really aren't good options. And there is a sort of a statutory mandate that the FDA be more flexible in those cases. But even with that in mind, I do think that they push the standard much too far, given the really limited and contradictory nature of the results. And the fact that this isn't, a side effect-free drug, it can cause, when it removes those amyloid plaques, potential brain swelling, especially when you have such mixed evidence of efficacy, you have to consider that risk benefit. So I really do think that this was an error, and it's going to be a very expensive one. It is going to take a really long time to get that confirmatory result, because Biogen has no incentive to hurry up to do something that may see its drug pulled off the market when it can keep selling it in the meantime.
And of course, as you point out, it could lead a lot of other pharmaceuticals in the wrong direction if the amyloid treatment isn't the answer. But it's such a horrible disease that everyone wants to find a solution as soon as possible. Bloomberg opinion columnist Max Neeson, thanks very much. We're going to cover this story a little bit later on in the program as well with Sam Fazeli, our head of research here in Europe. Right now, I want to get to another story with a lot of question marks. The CEO of Colonial Pipeline heads to Capitol Hill today. It comes as the U.S. Department of Justice announced yesterday it recouped most of the Bitcoin ransom paid to hackers by Colonial Pipeline. Take a listen.
Earlier today, the Department of Justice has found and recaptured the majority of the ransom Colonial paid to the dark side network in the wake of last month's ransomware attack.
All right, so officials saying they seized 63.7 Bitcoin, currently valued at about $2.3 million. But the interesting thing is it's almost impossible to guess a private key. Your chances are 1 in the number of atoms in the visible universe. So in order to do this, they must have had the private key on one of their own servers, gotten it from a custodian or an exchange. Bloomberg's Jamie Terabay joins us now for more. I guess the other possibility, Jamie, is that they hacked a server used by this dark side group and found the private key there.
I feel like I'm talking to Detective Matt Miller this afternoon. I love that we've been discussing this beforehand, and I think you're right. I think that there's going to be some kind of detective work or a little more sunlight on just how the FBI managed to get this private key. If, as you said, that we know that their servers went down at one point and they were out of commission, and if they were, as you said, silly enough to leave it on a server like that, then that kind of just let the door wide open for the FBI to walk in. So, this is a win, obviously, for the FBI and for the DOJ, and also incredibly rare, as you said. And even as we talk about the ins and outs and Colonial probably sitting on that bit of Bitcoin until it increases in value again. The dark side guys are still at large. They're still doing what they're doing, and they still got paid, even though it wasn't as much as they'd initially asked for.
All right, we have to leave it there. Thank you so much to Bloomberg's Jamie Terabay. I do want to take a quick check now on some stocks moving in pre-market trading here in the U.S. One of your big outperformers to the upside is actually Stitch Fix. It is higher by about 15% in early hours after results after the bell yesterday. Its forecast really the key. It beat expectations. You also had Marvel Technologies reporting after the bell yesterday. It is higher in pre-market trading after those topped analyst estimates by about 4.5%. And then we were just talking about Biogen with Max Neeson, the FDA approving the company's Alzheimer's drug. That sent shares higher by nearly 40% yesterday. Today, though, they are lower, down the better part of 1% in early hours, Francine.
Yeah, so much going on. Coming up, Christian Mueller-Glissmann, Goldman Sachs Managing Director of Portfolio Strategy and Asset Allocation. That conversation is up next, and this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kailey Leinz in New York. We welcome all of our radio listeners as well on London DAB Digital. I have so many charts that I wanted to show, and I was thinking, what's the easiest I can do to walk the radio listeners through since they can't see? Well, I've decided to pull up the reverse repo chart once again. It's been a favorite of mine over the last couple of weeks. And the interesting thing here is this is a chart that goes back to 2016. 2016, 2017, really the last time we saw a lot of cash stored in the Fed's reverse repo facility. Then there was nothing for the next few years until just a blip at the beginning of the pandemic. And all of a sudden, banks are putting more money into the reverse repo facility than they ever have before, at 0% interest, it should be noted. And of course, the real rate, when you factor in inflation, makes it negative. So the question is, why are 40 to 50 institutions storing almost $500 billion of cash in this reverse repo facility for a negative return overnight? Joining us now is Christian Mueller-Glissmann, Managing Director of Portfolio Strategy and Asset Allocation at Goldman Sachs. Would you allocate your assets to this right now, Christian? And I guess really the more important question is, what does this mean?
Yeah, no, I mean, as you know, like at the margin, cash is not a particularly interesting asset, as you were saying, when you have rising inflation. But the funny thing is, it's a relatively safe asset, and I think banks obviously are driven by very different kind of capital allocation decisions than investors, and I think maybe that's just a reflection of them having to hold a decent amount of cash as part of their business, and at the margin, the type of risk of going into other assets relative to the kind of erosion from inflation is not such a big deal. No, I think from an asset allocation point of view, we are currently reasonably neutral.
But hang on, Christian, hang on 1 second. Wasn't that the case 2 weeks ago, 3 weeks ago, 1 month ago, 2 months ago? I mean, what has changed to drive all of a sudden from nothing to 500 billion into the reverse repo facility in the span of, a couple days?
Yeah, no, I think it has probably to do with lack of alternatives like T-bill issuance, etc. But to be honest, I think at the margin, it is just one of these anomalies which the Fed will have to react to, and at the margin, kind of adjust their policies to kind of create a bit of normalization.
Christian, for those, I mean, I'm sure everybody knows, but, just a quick reminder that a reverse repo is basically the short-term agreement to buy securities in order to sell them back at a slightly higher price. When you look at regions, Christian, where do you find the most value? So is it these, is it thanks to the ECB Europe, where you could actually pick something up for a good deal, or is it the Fed just because, or in the US because the economy is stronger?
Yeah, at the margin, if we look at the kind of broader reflationary theme, I think it is shifting a bit with regards to kind of growth towards Europe. And I think we've seen recent rates market in Europe kind of pushing higher, whereas US yields have been a bit more range bound, at least in the back end. And at the margin, that theme is likely to continue in our view. We're still very bullish on Europe and European growth. And we do think that a lot of cross-asset opportunities exist in FX and equities, and to some extent in bonds. But I think what the US obviously has going for itself is that type of inflation momentum you currently have. I think you do actually see inflation continue to creep higher. You do see inflation continue to surprise to the upside. And at the margin, that might eventually drive some type of rates volatility. And I think that's a key concern we have with investors currently, that there is some type of delayed reaction from the Fed or delayed acknowledgement that inflation overshoot will have to be dealt with in a more aggressive way. Because as of now, if you look at the Fed pricing, it is more hawkish than what our economists expect, but it is still in line with a more dovish type of Fed rate hike cycle, whereas increasingly a lot of clients we speak to are worried about the need for the Fed to tighten faster and in terms of magnitude much more than maybe in previous cycles.
Is that going to bring back volatility, Christian?
I think so. I mean, like, you're definitely right that the big discussion in the last few days has been the settling of the VIX. No, the VIX is finally coming back towards lower levels, and it came alongside a settling of rates volatility. Because if you look since the beginning of the year, most of the volatility in equities hasn't been due to growth. Because growth has been amazing. It has been due to rates, where I think secular growth stocks have been incredibly volatile, but also the whole equity valuation discussion has been a bit of a drag for equities, because higher rates obviously push down the equity risk premium. So I think this rates volatility has definitely been the key driver of keeping the kind of VIX a bit elevated. We talked about this before, you might remember, with the concept of equity duration. No, so I think that was the driver of equity volatility. That's settled in the last 2 weeks. Like, if you look at like implied rates volatility for 10-year rates, that's been ticking down. But I would argue, to your point, that it's a bit too early to completely fade the prospect of rates volatility. And similarly, in that regard, to expect the VIX to kind of break through the 16 level. I think based on our macro model, the VIX is perfectly in line with macro variables currently. So I think to have it going lower would really create a bit of an opportunity to lean against that, I would say.
Interesting. Christian, thank you so much, as ever, for your insights. Christian Mueller-Glissmann, Managing Director of Portfolio Strategy and Asset Allocation at Goldman Sachs. Now, later today, don't miss our coverage of the Bloomberg Deal Summit. Executives, investors, and insiders will share their insight on the boom in M&A at this virtual event. It starts at 9 a.m. New York time. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, coming up shortly, we'll talk Apple with Richard Windsor, founder of Radio Free Mobile. We'll have a lot to say, of course, about the developers conference and some of the extra security that they've attached to future features. This is Bloomberg. Well, this is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, there is quite a lot going on in the markets, Matt, but it is a little bit quieter out there. So we're looking at, of course, the fact that the FBI was able to claw back the ransom that they paid for the cyber attack on Continental, and then a couple of other stories that really caught our attention, including the repo that you were talking about earlier.
Yeah, I mean, I think there's a lot going on, really, with question marks. You've got especially the Alzheimer's drug, which is, so many people are affected by this horrible disease that we need to find a cure or at least some treatment that really helps. And I think that's the optimism in that stock. We saw it jump, I think, 65% yesterday. Biogen did, closed up 38%. We'll be watching it today as well. But there are question marks around what's going on with Bitcoin. There are question marks around the G7 tax agreement. Can that ever get past even a U.S. Congress, let alone the rest of the world? So there's a lot up in the air.
There is a lot up in the air. I don't know how it's playing out on the markets, Kailey, because, of course, the other factor is the variance and inflation.
So many things that the market has to balance and consider, Francine. Where that leaves us, though, is actually right around record highs on both sides of the Atlantic. We are at a record high on the stock 600 in Europe. It continues to inch higher, up about 0.4% today. And here in the U.S., futures starting to gain a footing. We're up about 5 points on S&P E-minis. Right now sitting at 42.30, which would be a record high if this holds come the opening bell in about 4 hours' time. In the bond market, not a lot of action. We are seeing yields moving lower by about a basis point, 1.55%, which is the lowest on the 10-year yield since back in late April. And then, of course, Matt, you were talking about Bitcoin, whether or not it's related to the Department of Justice recouping some of that money from the Colonial Pipeline ransomware attack, or whatever the cause of it is. Bitcoin is down about 5%. Right now, we're sitting at a 32 handle, $32,000 on Bitcoin, which is the lowest since January. And no surprise, that is dragging on some crypto-tied stocks and pre-market trading. Coinbase down about 2%. But some stocks moving to the upside include those Reddit trader favorites. Wendy's now, the fast food chain, getting a mention on the Wall Street Bets forum. And as a result, up about 8.4%. I know you're thinking about a potential Frosty, Matt Miller, and then maybe some popcorn as well. AMC up 4.5%. GameStop by about 3.5% in early hours, Matt.
Can I just tell you, Wendy's was founded in the great state of Ohio, the capital city of Columbus. And as a kid growing up, I would go to the first Wendy's #1 all the time on Broad Street.
The OG.
Definitely the double bacon cheeseburger for me. Frosty for sure. And dipping your fries in Frosties is really a pro tip. All right, I have a terminal here. I have a chart here that shows, for our listeners on radio, I'll walk you through it, but you already know what I'm about to show you. Commodity prices have just been soaring. This is the Bloomberg Commodities Spot Index, and the chart goes back to the early 2000s. What we can see is we've now risen to a level eclipsing everything in the past decade. So we're at a 10-year high in terms of commodities prices. We talk so much about the chip shortage when we're talking about building cars as well as Apple products, for example. But don't forget, there's a lot of commodities that go into these things as well. So those prices, Fran, have to go up if a company like Apple wants to pad its margins.
I mean, it certainly, and the whole story about margins and Amazon and whether they'll even make that threshold for tax is one of the big things that we're watching out for. In the meantime, Apple gave a preview of its next iPhone operating system at its annual Worldwide Developers Conference. It includes new features for iMessage, Photos, Digital Wallet, Maps, and Notifications. Now, the Apple chief executive, Tim Cook, spoke at the event.
We've continued to look for ways to help cultivate the next generation of developers, with an emphasis on those underrepresented in technology. We host entrepreneur camps for Black and female developers to foster the talents of future industry leaders. Our developer academies, including the newest in Detroit, prepare the coders of tomorrow with valuable tools and training.
Well, joining us now is Richard Windsor, founder at Radio Free Mobile. Richard, we'll get to the developers conference in a second, but actually, how much does this tax agreement change everything for some of these big companies? Share prices barely moved, so I don't know whether they think it won't happen or it'll just be postponed by so much that it won't really make a difference to revenue.
Well, I think if you look at the agreements that has been agreed on over the last couple of days, if it's as it stands today, it's not going to change an awful amount. Take the worst case scenario, let's just say Ireland. This is clearly aimed at Ireland with its tax rate, I think, of 12.3%. Worst case scenario, Ireland has to jack its tax rate up to 15%, bullied by the rest of the G7. And it's not going to make an enormous amount of difference. What I think, where the risk, I think, for the big companies lies is that this becomes a baseline, and the actual baseline isn't 15%, let's say it's 25%, and then you've got a significant hit. But the higher you raise the tax rate, this agreed on tax rate, the more and more difficult it is. You're going to be able to get it past the various parliaments that would have to ratify it.
So is there anyone, if you look, for example, at an Amazon, right, would it even qualify? I know they're still trying to work on the proposal, but would they qualify for that tax? Or are they just not making enough money in terms of revenue in certain countries to qualify for that?
Amazon doesn't make enough profit globally. Certainly, I mean, if you look at it, its international operations is much less profitable than its US-based operation. And so from that perspective, it will be some time before it gets up to a level where it may actually have to start paying some tax. So, again, net at the moment, you've still got an awful amount of uncertainty on this. It still has to be agreed formally. So I think there's a long way to travel on this story.
In terms of products, Richard, were there any game-changing announcements at the Worldwide Developers Conference? Is there any reason I'm going to have to sell everything I own and buy immediately the new iPhone or the new Apple Watch or whatever new goodie they've come out with?
Well, of course, that's exactly what Apple wants you to do, and that's what their announcements is really geared towards. However, if you look at what they actually talked about, Apple is taking absolutely no risks at the moment, and it's totally understandable. They've got this massive juggernaut of a business churning out hardware. And what they basically do is they make tiny improvements, have a look, see what the impact is, and then move it slightly more. But two things that I thought stood out particularly. First one is that now when you take your iPad and you put it next to your Mac, you can actually use your mouse and keyboard from the Mac with the iPad. Now, what that is a sign that Apple is thinking about merging all of that together, and then perhaps the tablet eventually basically just becomes a touch-based laptop. That was one thing. The other thing I thought was particularly interesting was in the smart home, where Apple is now allowing the Siri digital assistant to be present on devices made by other manufacturers. That's very telling because what it implies is that Apple puts no value on Siri at all in terms of its differentiation.
Me either. I value Siri at 0. Richard, what about the App Store? If I open my own store, as an American, I feel like I have a right to decide, what stuff I sell in the store and how much margin I want to charge. However, in this case, it seems that some in the Justice Department may think that the App Store is too important to life as we know it. What's your take?
I certainly wouldn't go that far. But I think the human race has been around for about 3 million years before the App Store actually existed. So I wouldn't go quite that far. But from the perspective of the size of the app economy, it is obviously gigantic. And so there are concerns out there in terms of how much Apple is dominating and potentially manipulating such an enormous economy on which so many people depend for their livelihood. The big question mark, I think, that will move the narrative, I think, on this is what is the outcome of the trial between Epic Games and Apple? What does the judge come down with in terms of his ruling? And I think that will have a big influence on this situation. No knowing exactly when that's going to come, hopefully sometime in the next couple of months.
So if we boil this all down to an investment thesis, Richard, if Matt Miller isn't selling everything he owns to buy a new Apple Watch, should he sell everything he owns to buy Apple shares here?
From my perspective, absolutely not. I think what Apple is doing is they're keeping ahead of the competition, they're catching up with the competition where they've been a bit behind, but then the company's not doing anything radical. Now that means it's at risk in the long term of being disrupted when there's a huge change in the market, but there's no sign of that for some time. Now then, if you then take that and you look at Apple's valuation, I would argue that it's, that's pretty much fully priced in terms of the shares. And frankly, I would prefer to look elsewhere, like Alibaba, for example, which is a stock that I do personally own, where I think that the Chinese regulators hammered it far harder. The share price has been hammered far harder than the regulator has actually hurt the company.
Richard, thank you. Richard Windsor, their founder at Radio Free Mobile. Now, we'll have a lot more, of course, on some of these tech companies, Apple and Amazon. Now, also game changer for Alzheimer's drug. Well, a U.S. regulator or U.S. regulators gives a nod to Biogen's controversial therapy, the first new Alzheimer's drug in 20 years. More on that breakthrough next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kailey Leinz in New York. Now, it's a major shakeup in the pharmaceutical world. The approval of Biogen's Alzheimer's drug has driven shares of many companies higher. It's the first new drug that is purported to combat the disease in 20 years. But the FDA has accelerated approval even though the testing was controversial and didn't look terribly successful, according to our Bloomberg opinion columnist. Let's get more from Bloomberg Intelligence analyst Sam Fazeli. He's the senior pharmaceutical analyst, but he also runs Bloomberg Intelligence for us in Europe. And Sam, I'm curious because I know, as so many people probably do, close friends and family afflicted by this awful disease. And my first feeling was one of incredible optimism when I saw this headline come through. And then I read about the testing and I felt really deflated and wondered why the FDA even approved this drug. What are your thoughts?
Good morning, Matt. So exactly the same feelings as you. This should be a day that we should be celebrating the approval of a new drug for a devastating disease that very likely will touch many of us one way or another. But unfortunately, that's not the case. I think I'd really certainly hope that the FDA has done the right thing here. But looking at the data that we have seen and their own expert panel had seen, it does leave a lot of room for controversy, and you have to troll through the data to find positive signals.
So what does that mean, Sam, that there will be investigations that actually, for the moment, even if it's approved, there won't be prescribing it, or that governments won't pick up the tab?
I don't think it's possible to do that. When the gold standard regulator in the world, or one of the gold standard regulators in the world, approves the drug with such a broad label, I don't think insurance companies and doctors can refuse their patients. That's going to be the most interesting angle to see.
So what does this mean for other Alzheimer's drugs that are in the pipeline, Sam?
Given that the FDA's decision appears to have been heavily biased by the fact that the drug reduced the amount of this amyloid plaques in the brain. There are other drugs that do the same. Eli Lilly's had an incredible impact on that. Roche Pharmaceuticals has shown some data that points the same way, and they'll have more in a year's time. So if that's what it takes to get approval and some signal of efficacy, then this should lead to several other approvals.
And Max Neeson, of course, Bloomberg opinion writer, argues this is the problem, Sam, that now everyone's going to be funneling billions of dollars into trying to deal with amyloid plaques. And what if that's not the answer?
Yep, that's, there will be another trial that's being done. There will be other companies that will report data. If there are major failures, I think the FDA will have to review, although all of these antibodies, these drugs, work slightly differently to each other. So you could always make that argument and say, no, actually, no, the reason this failed was because of that. But if they all reduce amyloid significantly, just like the Biogen drug, and they fail to show a benefit, then you have some questions that will have to be raised to the FDA again.
Still a lot of question marks. Thank you so much, Bloomberg Intelligence Senior Pharmaceuticals Analyst Sam Fazeli. And don't forget, later today, our coverage of the Bloomberg Deal Summit will be coming up. Executives, investors, and insiders will share their insight on the boom in M&A at this virtual event. This is Bloomberg.
We're waking up to a shortage of everything. We've had this global experience of this virus. So we've all been home for a year and a half, thinking about a better world. And when we come out of it, we're seeing constraints in the supply chain in shipping, in semiconductors, in lumber, in corn, and of course in the metals. But when you actually make the shift from hydrocarbon to an electrified world economy, the impact on copper and cobalt and other critical electrical metals is enormous.
Robert, price is another reason for us to be having this conversation. A ton of copper is trading at about $10,000 right now. Most miners want the price as high as possible, and some analysts foresee $15,000, even $20,000. But as I understand it, you see risks in such high prices. What are they?
First of all, the copper price hasn't moved. It's the United States dollar is failing against copper. So if you think that a Bitcoin or Ether is money, why isn't copper money? It's just priced in dollars. And so when governments go on an orgy of monetary creation, and I'm drinking the Kool-Aid that we're seeing, we're seeing the white eyes of inflation coming, it's really that everything is priced in these pieces of paper that are no longer printed. It's an electronic ledger entry for the United States government. So since central banks have made money nearly free everywhere, you start seeing a rise in anything we need. And as a species, we desperately need these electrical metals if we're ever going to get off the hydrocarbon addiction.
All the same, people are spending dollars to buy the things made with those metals. If copper stays at 10 or rises to 15 or rises to 20, what happens? And why are those things not good?
Well, we get a very slow, in the mining industry, you could double the price of copper this afternoon. It won't materially change the amount of copper we can produce in the next decade. It would help a little bit at the margin. Most governments would just come forward and say, that's for me. You're here in my backyard, you're mining my copper, and you're taking it home. So the question of sustainability now has to be solved, because
you raised the resource nationalism question.
Well, every hand phone is an NGO. It's got, Apple's put a very good camera on the back of it. So there's no hiding anymore. The whole supply chain has to be audited. So when I was a kid and I grew up, there was that paper on the back of the Corvette. It told you what it cost and all the options. Then there's a piece of paper coming that says how much global warming gas is produced per kilometer driven. The third piece of paper is going to say how much global warming gas was generated to make that car. And this is what the automakers are concerned about, is that the whole supply chain is going to be audited to the bottom. And that's going to change everything, including the financial markets, I might add.
That was Robert Friedland there, Ivanhoe Mines co-chair and co-founder, speaking exclusively with Bloomberg's Eric Schatzker. Now we're joined by Tom Keene, co-anchor of Bloomberg Surveillance. Tom, I know you're looking at Bitcoin, and you also have some great guests coming up.
Oh, we've got a real equity feel to the show. We start strong with Ben Laidler. He's been a bull. He'll reconfirm a bull. He's also looking at the Laidler Breakfast Index, which is different than the Lacqua Breakfast Index. The Lacqua Breakfast Index.
Mine's more continental.
Very continental and outrageously expensive, particularly the sconces that you have with your cappuccino. We'll also have with us David B. Stilton's breakfast is too early for Stilton. David Bianco of DWS with us as well with an equity overview. Much more on that. And also on Bitcoin, I think we lose perspective. Bitcoin, I look at logarithmically like I'd look at any other investment. And when you take the y-axis to log on Bitcoin, it is not as nearly as advanced in price as the doom and gloom crew would say. It really flattens out beautifully. And going back a good 7 years, 8 years, it's shockingly on trend given going to logs. That's a really important distinction, Francine.
Yeah, it is, but I'm also interested, Tom, I mean, Matt Miller sent this great story out saying, look, the colonial hackers broke this fundamental Bitcoin rule, and I wonder whether it was traceable. It makes it also more accepted mainstream. So we'll talk
That's the heart of the matter. We'll see what the governments do on that.
Yeah.
I mean, it's just a matter of time before the governments weigh in.
Tom, thank you. Tom Keene there, co-anchor of Bloomberg Surveillance. Now, we still have a day ahead of us, so we're watching a lot of things. Kailey, what's on your radar?
Just coming up in a couple minutes, Francine, is MFIB Small Business Optimism. That's at 6 a.m. Eastern Time. A really good read on what small businesses are dealing with. Of course, anything they say about hiring and wages is particularly interesting, and of course, how optimistic they are about the recovery. So that's what I'll be watching in about 5 minutes, but it obviously is a good read, especially ahead of that inflation report coming up on Thursday, and in hindsight from the jobs report on Friday, Matt.
You know, going back to the beginning of Tom's log chart, back then I gifted one of my co-anchors, Adam Johnson, a little bit of Bitcoin on air, and he accidentally showed the private key to the camera, so the Bitcoin was stolen in an instant. But otherwise, it's nearly impossible to hack a Bitcoin wallet. So my question remains, how did the feds get a hold of this Bitcoin? And I think that's a question on investors' minds as well, as you see Bitcoin down 5% to under $33,000 a piece.
Yeah, so I guess we'll also be watching that testimony, right, from the Colonial Pipeline chief executive. I don't know what Kailey and I are getting for Christmas, but Bitcoin sounds nice. Or even I think we have a couple of birthdays, Matt Miller, coming up. I don't know, how many Bitcoins can you now afford for your co-anchors?
Maybe by Christmas I'll be able to afford it, yeah.
Yeah, maybe like 0.01 Bitcoin. But, you know, the fact that investigators could trace the untraceable and sees it might be undermining this.
No, it's all traceable. No.
Case, right?
This is the mistake. Right. It's all very, very traceable. It's public. It's public ledger.
Right, so that's what we've seen, and that's, you know, maybe the narrative changes around Bitcoin in the future. Coming up in the next hour, Ben Laidler, eToro Global Market Strategist. This is Bloomberg.